Hello, everyone. Have you ever looked around and wondered how some people turn everyday opportunities into massive profits? The secret isn't just working harder. It's working smarter by applying the right financial strategies. In today's video, we're going to unlock key business and investment strategies that can help you maximize your earnings. We'll explore how to profit from price differences, add value to products and services, and make strategic investments that work in your favor. Stick with us until the end, because what you're about to learn could completely change the way you see business opportunities. Now, imagine this. You discover a product that is significantly cheaper in location A than in location B. What if you buy that product in location A and sell it in location B at a higher price? That difference in price? That's your profit. This concept is known as arbitrage, a widely used business strategy that has helped countless entrepreneurs succeed across various industries. From trading physical goods and real estate to capitalizing on financial market fluctuations, arbitrage is a powerful tool when used correctly. With the right knowledge and approach, you too can harness this strategy to build a thriving, more profitable business. So, are you ready to take your financial game to the next level? Let's dive in and explore the secrets of smart investing and business growth. Everywhere you look, opportunities for profit are waiting to be discovered. The key is knowing how to turn them into success. It's not just about working harder. It's about thinking ahead, making smart moves, and understanding the financial principles that can transform small opportunities into life-changing results. Number 1. Leveraging price differences. One of the most powerful strategies in business and investing is recognizing price differences and using them to your advantage. This strategy goes beyond just the idea of buying low and selling high. It's about understanding what makes something undervalued and predicting how its value will change over time. Imagine this scenario. You're walking through a neighborhood that's still developing. The streets are quiet, the buildings are old, and property prices are low. Most people might see an empty lot or a rundown building and think it's not worth much. But as an investor, you need to think differently. What if this quiet neighborhood is actually full of potential? You see, the property market is always changing, and while things may look slow now, in the future, the situation will be completely different. In time, new businesses, schools, and infrastructure will be built, attracting more people to the area. As the demand for properties rises, so will the value of those properties. This is where the real opportunity lies. By recognizing the potential early on, you can make smart decisions and invest in what others might overlook. You're acting before the majority of people realize the area's true worth. And when the market catches up and prices begin to rise, you'll already be in a position to benefit from the growth. This approach isn't limited to real estate. It can apply to stocks, products, services, or even entire industries. The key is to identify things that are undervalued or overlooked in the present, then anticipate how their value will change in the future. If you can do that, you'll be in a much stronger position to make profitable decisions, just like that visionary investor who saw the future of that developing neighborhood before anyone else did. So, it's not just about reacting to what's happening now. It's about seeing what could happen in the future and positioning yourself to take advantage of it. Number 2. Adding value to products or services. Recognizing opportunities is just the beginning. The real secret to exponential growth comes from adding value. This is where the magic happens. You see, the world doesn't reward mediocrity. It rewards those who can elevate the ordinary into something extraordinary. And this is something you can apply to nearly any product or service. Let's start with a simple product. Picture something that anyone can buy. A basic item that doesn't seem particularly special. Now, imagine what would happen if you took that product and transformed it. You could enhance its design, improve its quality, or even package it in a way that provides an experience, not just a product. You could offer a unique benefit that no one else provides. When you add that extra layer of value, suddenly the product becomes much more than it was. People aren't just paying for the item itself. They're paying for the experience it gives them, the story behind it, and the feeling they get when they own it. For example, think about a simple handmade leather wallet. On its own, it's just a wallet. But when you add personalized engraving, luxurious packaging, and tell a story about the craftsmanship behind it, it transforms. What was once an ordinary wallet is now a premium accessory that people are willing to pay more for. They don't just want a wallet. They want something that feels personal and special. Or, let's consider a meal. At its core, it's food, but when you combine it with exceptional service, artistic presentation, and a memorable atmosphere, it becomes much more than just eating. It becomes an exclusive dining experience that people are excited to pay a premium for. It's not just about satisfying hunger. It's about creating a lasting memory. This is the essence of what the most successful businesses do. They don't just sell products. They sell emotions, convenience, exclusivity, and prestige. They understand that people crave more than just the physical product. They're looking for experiences and feelings that make them feel special. By adding value in these ways, businesses create a deeper connection with their customers, and in return, customers are willing to invest more. So, if you want to take your business or investments to the next level, think about how you can add value to whatever you're offering. The more you can enhance the experience, the more people will see it as something worth paying for, and that's where real growth happens. Number 3. Smart investing and diversification. Finally, true financial mastery comes from smart investing and diversification. No investment, no matter how promising it looks, is ever completely secure. Markets rise and fall, trends shift, and industries evolve. This is why it's crucial to remember that relying on a single source of income or a single investment is risky. The key to long-term success is building multiple streams of wealth that support each other and help you weather any storm. A savvy investor understands this principle. They know that real estate can offer stability, providing a reliable foundation in times of market turbulence. Stocks are there for growth. They may be more volatile, but they offer the potential for high returns over time. Businesses generate cash flow, keeping the money coming in regularly, and digital assets open up new frontiers of opportunity, tapping into emerging markets like cryptocurrencies or tech innovations. By spreading investments across these different areas, risks are minimized, and the foundation for long-term wealth is strengthened. This approach isn't about gambling or taking reckless chances. It's about making calculated, strategic decisions that ensure you have financial independence, no matter what happens in the market. Diversification protects your wealth, making sure you're not overly exposed to the risks of any one investment. Success in business and investing is not about luck. It's about knowledge, vision, and execution. It's about being able to see the opportunities that others overlook, acting when others hesitate, and constantly seeking to learn, adapt, and innovate. The world is full of untapped potential, just waiting for those who are bold enough to claim it. The only question now is, will you be the one to seize the opportunity? To truly succeed in business and investing, you must also avoid common mistakes that often slow down or even ruin progress. One of the biggest mistakes you can make in business or investing is neglecting market research. Before making any decision, whether you're purchasing assets or products for resale, it's absolutely crucial to understand the market trends and demand. Doing so helps you avoid costly mistakes and ensures your investments are informed, not based on guesswork. Market research isn't just about looking at a product and assuming it will sell. It's about thoroughly analyzing current market conditions. Is the demand for this product rising, or is it on the decline? Are prices stable, or are they fluctuating wildly? Without a solid understanding of these factors, you're essentially making decisions in the dark, which could lead to poor investments that drain your capital without delivering the returns you expect. Think about it. If you're investing in a product that's already past its prime or buying into a market that's saturated, you could end up with stock that won't sell or assets that lose value quickly. On the other hand, understanding where the demand is growing or where prices are set to rise can help you make investments that will pay off. In short, market research is the foundation of every successful investment. It's not just about knowing what's trendy. It's about understanding where the market is going and positioning yourself accordingly. Without this knowledge, even the best products or assets can turn into costly miscalculations. So, always make research your first step and let it guide your decisions. Another dangerous mistake many people make is greed for quick profits. The temptation to chase fast money can be overwhelming, especially when it seems like there's an easy way to make a lot of money quickly. But this often leads to impulsive decisions that are driven by emotion rather than logic, and those decisions can be disastrous. When people focus only on making big gains in a short amount of time, They tend to overlook other crucial factors that contribute to long-term success. Greed often blinds people to the risks that come with certain investments. This can push them into unstable or high-risk ventures without fully understanding what's at stake. They may get caught up in the excitement and forget that quick profits rarely last, and the consequences of those risks can be far worse than the rewards. Instead of chasing fast money, it's important to stay realistic and cautious. The key to sustainable growth is not rushing to make a quick buck, but making informed decisions based on solid research, careful planning, and timing. Success comes from building a foundation of well-thought-out moves, not from taking shortcuts that lead to big losses. In business and investing, patience is a virtue. By staying focused on long-term goals and being mindful of the risks, you ensure that your growth is not only achievable, but also sustainable. So, remember, greed may offer short-term excitement, but prudence and careful planning are what lead to lasting success. Finally, poor financial planning is a common pitfall that can prevent you from achieving long-term success. One of the biggest mistakes people make is spending all of their profits without having a clear plan in place. While it may feel good to enjoy the rewards of your hard work, failing to manage your business or investment earnings wisely can quickly lead to trouble. Business and investment earnings should be treated as tools to build more wealth, not as money to be spent immediately. A critical part of smart financial planning is allocating a portion of your earnings for reinvestment. By putting some of your profits back into your business or investments, you're giving yourself the chance to grow even more in the future. This is how wealth is built over time. Another essential element of good financial planning is having an emergency fund. An emergency fund acts as a financial safety net, ready to support you in times of need. Unexpected situations can arise at any moment, whether it's sudden market shifts, unanticipated business costs, or urgent personal expenses. Having an emergency fund ensures that you're prepared for these moments, helping you avoid financial strain and stay on course. When you manage your finances properly, your profits don't just disappear. They can be reinvested to fuel continuous growth, provide stability, and offer long-term security. Proper financial management ensures that you don't just survive, you thrive. Success in business and investing is not a game of luck. It's a game of knowledge, vision, and execution. It belongs to those who can see what others ignore, those who act while others hesitate, and those who continuously seek to learn, adapt, and innovate. The world is filled with untapped potential, waiting for those bold enough to claim it. The only question is, will you be the one to seize the opportunity? To achieve success, there are some simple but powerful strategies you can incorporate into your daily routine. Let's take a closer look at how you can apply these principles effectively. Number 1, focus on more than just price. When you think about what you offer, don't just focus on the price. Price is important, but it's not the only thing that matters. What makes your product or service stand out? Think about the added value you can provide. This could mean offering better customer service, creating a memorable experience, or building a strong brand that people connect with. People are willing to pay more when they see something unique or when they feel valued. So, focus on giving them more than they expect. When you bring something different to the table, you create a strong reason for customers to choose you, even if your price is higher than others. Innovation is key here. The more you can offer something new or improved, the more you can justify the value of your product. Number 2, use capital wisely. Managing your money wisely is one of the most crucial parts of success. Before making any investment or spending money, take a moment to think about how it fits into your bigger picture. Don't just spend for the sake of it. Make sure you've done your research and understand where your money is going. Be careful about jumping into big investments without thinking through the risks. Look at the potential rewards, but also the risks involved. Use your resources in a way that allows you to grow steadily without overextending yourself financially. It's also important to leave some room for flexibility. There will be unexpected opportunities or challenges, and having some capital set aside can make sure you're able to adapt and keep moving forward. Number 3, stay updated on business and economic trends. The world around us is constantly changing, and so is the business environment. To stay ahead, you need to be aware of the latest developments in both business and the economy. Pay attention to shifts in the market, changes in consumer behavior, and any new technologies or regulations that could affect your business. Stay informed about economic trends like inflation, interest rates, and the job market. These can all impact how you run your business, from costs to pricing strategies. When you know what's happening, you can adjust your approach and be prepared for what's coming next. Keep learning. Whether it's reading articles, listening to podcasts, or talking to others in your industry, being aware of what's happening around you helps you make smarter, more informed decisions. By staying updated, you're able to anticipate challenges and seize new opportunities that may come your way. In everything we've discussed, there are 3 key principles that stand out for achieving financial success. First, leverage price differences. Price isn't the only factor that determines your success. By focusing on what makes your product or service unique, you can charge a higher price that reflects its true value. This allows you to take advantage of price differences and increase your profitability. Second, add value to your products and services. Business success isn't just about selling something. It's about offering more than what's expected. Whether it's improving customer service, enhancing the experience, or building a strong brand, adding value makes your offering stand out. This leads to customer loyalty and higher returns. Lastly, invest wisely and diversify. Smart investments are the foundation of growth. Spreading your investments across different areas reduces risk while increasing opportunities for returns. Diversification ensures you're not putting all your resources into one venture, keeping your growth steady and sustainable. By mastering these strategies, you'll be ready to seize the opportunities around you and maximize your profits. Apply these principles in every decision you make, and always remember, business success isn't about luck. It's about making the right decisions, grounded in knowledge and careful planning. Thanks for tuning in. If you found this helpful, don't forget to like, subscribe, and leave a comment below. I'll see you in the next video.